Good turnaround Tuesday, everybody. Welcome to F.A.C.E. Here's mine. How's everyone doing today? I think I have a video going in the background. Let me just check it out here. Yeah, I do.
Yeah.
Hold on a sec. All right. There we go. So I want to thank my trading warrior brother Kman yesterday.
Good early morning, Dale.
How are you?
Good, yourself?
Good, buddy. So who else is around? How about turning on the camera and letting those people see us besides, see how, nothing bothers us and how detached we are from trading, etc. But I went with your idea, went with it on the resistance at 3760. Came in, great call.
Yeah, and I sold.
Hi, Steve.
I sold all of my dollar yen out as well this morning.
Hello, Dale.
Yeah.
Just because of this resistance and it being out of sync with the moves that we saw in the commodities, oil, rate, yields. So it's possibly time for a bit of reassessment there.
Okay, so all the assessment and all the technicals, at least for a while tomorrow, with the biggest number. How you doing, Ryan? That the world has ever had in the markets. So tomorrow's the biggest number ever in the history of markets, isn't it, Ryan? And they're already leaking. I think the White House leaked yesterday. They wouldn't be surprised if it was a stronger number than
I think they've set the bar up, haven't they?
Yes, yeah. So they're putting the bar up there. Maybe there's a surprise, but I don't think so. Guys I follow think it's going to be a bad number. There hasn't been enough time for like gasoline drop 30 cents here in the U.S.
Wait a second. What do you consider to be a bad number?
Over the consensus, like 9.
Okay. Because many times they say like, oh, it missed, because inflation was lower, which is a good thing, right? I mean, inflation is, okay.
Yeah, so that's tomorrow.
Yeah,
and I'm betting that Stelios got filled on his silver order today because came right off. No, not yet. It's lower.
No, I would think so because I've got mine at 1880, so he must have got his as well.
Okay. So it's trying, but I mean the gold silver ratio looks like it wants to make another run at the highs over 93. So really, for silver to work, this can't be uptrending. Do you guys agree?
Yeah, and we shouldn't be getting too bad economic data for this to hold in silver. If really there are recession fears in silver is an industrial asset, there might be some more pain to take. That's why I'm keeping my my positions extremely small right now.
That's why I made mine extremely large. I did hear an interesting thing. Don't worry, I'll regret it. I heard an interesting thing that last week when the gold was getting hit, it was one of the most high panic days in the miners in 39 years. So I don't know if it was the magnitude of the move or it was outflows, maybe out of, it's the miners. But kind of like a panic day they had last week. And the biggest one in 40 years. Huh?
We had some news about a Russian gold miner, Petropavlovsk, files for administration in London. Maybe that had to do a bit with the metals as well.
I think it was, maybe we could find the day looking at GDX. Yeah, I'm trying to find out what day it could have been. But a high volume on, a breakdown day. I mean, GDX, it's a hope low. I mean, it is diverging, but doesn't look like it's bottomed yet. Jim Walsh is looking for about 25.5 or so. So getting closer. But we needed really, the metals aren't going to go anywhere until the dollar turns, in my opinion. What do you guys think?
Metals don't seem to be about to bottom. So in the short term, I think the path of least resistance remains lower for the metals. And of course, as long as the metals remain under pressure, the the GDX and the SIL, etc., should remain under pressure.
Okay. So what's the opinion in yields here going into the numbers? So they're setting the market up for, a high CPI number. I know that Stell would say he'd be looking for new highs, and Fed guy is talking 4.25 by year end. How did 10 years look to you guys? Start with Ryan.
Well, they're not looking too hot, are they? After the NFP last week, you thought we were sitting pretty above 3% and heading back to the highs. And here we are 5 minutes later, and we're back down again. I think it's more this goldfish market, and the bond market, who used to be the, what should we call them, the elder statesmen of trading markets. It's running around like an emerging market currency, if you like, isn't it? 1 minute you're up basis points, the next you're down 20 basis points. Bonds didn't used to move like that. But this is what the market's doing, repositioning its timeline. Yeah, we may get to 4.5% end of this year, next year, whatever, but it's how quickly the Fed are going to start cutting. And that's what's being reflected in yields, particularly things like, 5s, 10s, that sort of thing.
I heard MBSs went no bid after the Fed meeting.
Did they?
No bid. No bid.
Oh, good luck for the Fed getting out then.
There's no, that's a question. Everyone's
hasn't the Fed said that supposedly they wanted to eventually not have any MBSs in their balance sheet?
Right.
Yeah.
So so they were the only bid all this time, maybe. But maybe
they were definitely the safety of any bid.
Who's going to be on the other side? Who's going to buy MBSs as they roll off the balance sheet? No one can answer that question. Are you going to buy any, Ryan?
let me a few bucks down. I'll buy some.
Yeah, well, okay.
Leverage. I'll leverage your money.
I'll refer to the Robocop joke. That's the guy that's constantly on TV that says, "I'd buy that for $1."
Oh, okay.
So for $1, yeah.
The Duke brothers, that was as high as they go on their bets. And I really, what's interesting, you guys here, dollars made successive higher highs this week. You would think that Canada would finally be able to, clean out the stops above all of these highs and trade 131 or one,
but not yet.
At least. What do you think?
No, it's kind of strange. This resistance at 137.70 seems to be super resilient.
There's at least one stop.
I remind you that theoretically speaking, we had multiple reasons for the USD CAD to break higher, right?
Yeah.
One, it's crude.
Yeah.
Two, I remind you on Friday that we got data both for the US and Canada. We got bad Canadian data and good US data, and still that wasn't enough to help it break higher. Three, we've seen the dollar break higher against practically almost everything else from the majors, right?
Right. Aussie went to new lows.
Yes. Kiwi.
Right. Yeah.
Norwegian kroner. You name it.
You mean SEX? That's a symbol, right?
Yeah.
Yesterday. That's what... I'm going to Norway and converting my dollars to those. So
we have got the BOC tomorrow, so it could be that Mooney isn't going to fly too far from the coop.
Okay.
I was just going to mention about the Canada. You have on the other side of the medal, you have BOC tomorrow expected to raise up to 75 BPs. Then we have like it's like a triple or quadruple top already up there at 130.84. Canada is also in talks with Europe to provide some energy, and it's part of the American far from my bed problems in Ukraine organization, I would say. So, and I reckon that's where the Canadian dollar gets its better beat from. Maybe not against the dollar so much, but against the rest, like things like euro, for instance. Okay. So I think that's part of the reasons why the dollar Canada has been kept as a currency pair.
So has anyone been invited to parity parties?
Oh, we've all been jumping on the old parity bus, Dale.
Yeah. So, you know, the RSI structure is ugly, except that, you know, you have to go to maybe your favorite TF, where Kman, I don't know if I would short it, Ryan. You know,
there is a request for you to switch on your camera as well, mate.
Guess what I'm in, Dale? Guess which side I'm on.
Well, my background is like really bad.
You know,
do I want to know?
I would guess that you're on the long side based upon, you know, this grinding action here, and then, you know, So, you know,
long into we think that there's barriers down here, decent barriers down here. I mean, we've been watching it all morning. It was knocking around sort of 8s, 9s, 10s, 12s, couldn't get through. Then we had a little bit of a bounce. Then we got a horrendous zoo coming out, and it couldn't even break then. And you know, when you're looking at a level thinking it's getting hammered, but it's not going. And I was long into it with a stop reverse at just below. I've knocked some off at 48 in the bounce here, but yeah, the battle is on, and it's been interesting.
And it's you know, being confirmed by, you know, I was talking about this when you were away, Ryan, and I know Kman said you were buying it in here. I thought I might have a shot here. Who knows? Maybe here. I'm not sure, but really, when you look at EG, isn't there a bigger signal here, or is everything I learned 100 years ago about the markets meaningless now? And you know, I was always taught in the old days it was Swiss and D-Mark, okay, and then the new era became euro and pound to kind of get direction of the dollar and what would lead. But I have to think that this is a long-term bearish sign for the dollar, unless it's just all about cable weakness. The fact that euro has made, you know, successive new lows, and all we've done is retrace 50% on euro pound.
Yeah, well, to me, it's a good indicator of what wind is blowing. You know, and I mentioned this on the flow show this morning. You know, a lot of people look at the dollar and everything's about the dollar. The dollar's done this, the dollar's done that, the dollar's done the other. But sometimes the dollar can be just a consequence of what's happening in other markets. You know, euro's been particularly bad. We can see that on that euro sterling chart. You know, it's tipped off from the 87s.
Right.
Couldn't keep the 86s, and here we are down in the mid to low 84s. You know, the pound certainly isn't good, but it looks better on this chart.
Look, we're almost here. So, you know, remember I was talking to 118, bro, and it seemed like, you know, kind of a, you know, aggressive call, but it's actually, you know, we are going to diverge on the daily here, and it is a 3 drive pattern. Now, what happens with 3 drive patterns that bury me? Because some of them do. Okay, nothing's a lock. Is what, Steve? What do you think happens to me when I play a 3 drive that buries me?
It bounces after.
It does no. It melts through, and you end up with throwovers and throw unders, which make you want to throw up. All right, because you're playing the wedge line, right? You know, and it becomes meaningless and accelerates through it, and you have throw unders or throwovers. So, but you know, I don't think I'd be shorting cable down here either. Would you?
No.
Yeah. Okay. So, they have a new prime minister who looks likely to replace Boris's haircut.
Working on it. Everyone's throwing their hats into the ring, and then everyone else comes out and digs up dirt on the ones they don't want to get in, and so we get all the stories. Oh, it's a mess. I've tuned it out. I've tuned it out for the moment. Just tell me when we've got the final 2 people, and then we'll get back to it.
All right. Well, Biden's going to the Middle East, guys. So, are we going to see 94? Huh?
Does he know where it is?
He has people with him. So look at the confluence of the 200-day and the descending wedge line right there at 94, which had almost tagged last week before it popped. To me, the surprise to me would be a big move to the upside. A breakdown under 94 is going to be a negative event in energy. And, you know, I remember one of Gareth Soloway's rationales for crude, for his bearishness, was that it always came down right before a midterm. Now, is that a coincidence or what, Steve? That they could, you know, take energy down before an election, a midterm. And what's your view of the chart? Forget about.
I've said my view on the chart multiple times. I've been bearish for quite some time, and I think the recent rejection we had the day before yesterday, that's what I wrote in the weekend analysis, that we were in a sell zone again. I like the fact that we stalled there yesterday, and I definitely like the follow through I'm seeing today.
Yeah.
And I think there are serious possibilities to see lower levels in the days and weeks ahead. Now, how much lower we can go? I've said that I believe that we can even go back to $85 before we can end up resuming the uptrend. So, technically speaking, that possibility you're talking about, seeing lower crude towards the elections, towards the midterms, I think is a very likely probability. Now, I don't want to speculate if this type of event, you know, has, you know, an explanation behind it that is connected to the elections. I really have no idea. And as I've explained multiple times, you know, it's not even, you know, it doesn't even offer me something to speculate on that. I mean, it is what it is, right?
Yeah. You know, something I was talking about these videos of bank runs in China, and you know what is surprising? That it's not large amounts of money. And I'm trying to, you know, totalitarian state, how they let that happen without, you know, paying depositors. It was in the millions. Okay,
yeah,
it wasn't in the billions.
It's what we were talking about yesterday. Did
and
they
why
actually
would they let the world
happen?
Yeah, you know how they feel about saving face. Why would they ever let that news get out? To me, it's almost like you have to think that they wanted to.
Perhaps, but what does it change? I mean, we can speculate if they wanted to let it happen, if it happened, and they didn't, you know, predict it in advance before you know, things started escalating, etc. But what does it really change, right? It is what it is.
Has there been no major impact on the yuan?
Yes, that is true. Although don't forget that the yuan is a controlled currency in many respects, right?
It's up a bit today. Made a little break today.
Yeah, I'm showing it here.
Yeah.
And you know, some of the strongest stocks in this recent rally has been Chinese internet stocks. I don't know how people could trade those. Yeah, I mean,
Charles says China
there's enough fraud in our own markets. What?
Charles says China and Russia have a plan to hurt West via inflation. I don't know if that is the case, but I can tell you one thing with certainty, Charles. There is nobody that has done more to hurt the West
than the West
with inflation than the West. Yes,
I knew you were going to say
the measures we took for COVID and the way we tried to compensate loss of income by, in essence, substituting income that was coming from actual productivity to income that was coming, from giveaways, was the main ingredient for this inflationary fire that we're living through. And, China and Russia, if you exclude the event that, the virus started 99.9% in China, had nothing to do with that. In fact, whatever is happening currently with Russia and Ukraine came a lot later than inflation had already become a fire that was raging, right?
Okay. Bitcoin's not raging. Let's talk about risk. What do you guys think? Again, and I like your background, Kman. But I don't have my glasses on. So anyway, any feeling here for Steve? I feel like I'm at the optometrist and they dilated my eyes. So
you should go to the ophthalmologist. Everything looks blurry to you, right?
What do you think? There's option expiration people have talked about that could be negative. The number could be negative. Is this all of it? I know there were some people thinking, and I thought there was a possibility that we could trade 4,100 before we turn that down.
We can. It's a very. I wrote it yesterday as well. I've said it for a few days now. I've been saying it in the morning edge, the webinar that follows afterwards for our members. In my opinion, I've stopped looking at indices the last few days. I've mostly stopped looking for indices in the last few days because the environment in risk assets is currently so choppy that it's very, very annoying to follow. I mean, this is purely noise for me. And yes, we can end up going a little bit higher before we resume the downside. I can't exclude that possibility, or we can just directly go lower from here. I have no idea which of the two is going to happen, and I'm not in the business of betting, right? I like to take educated, guesses in the market when technically speaking there seems to be a clear direction. At the moment, short term, I think that we're just shopping around, and yes, we can go to 4,100 if we're talking about the S&P first. I won't be that much surprised, but for me, the path of least resistance, if we're talking about medium term, is absolutely, definitely lower.
Bitcoin.
Steve, yeah, you said you don't like betting. Did you lose a bet and now you have to wear that T-shirt?
This one? This is an Napapiri T-shirt. It's actually quite nice and expensive.
I don't know.
I'm not giving it to you even if you pay for it.
No, I thought I thought you were just wearing Jason's pajamas.
Yeah, wearing it for a bet.
Speaking of Jason,
come on in here, buddy.
He's here and he's begging for me to give him extra iPad time. So what do we tell him, guys?
Hi, Jason.
What do we tell you, Jason?
He's a character too. All right, so where do you guys want to go? I have an interview in about 7 minutes. In fact, Dave is going to be with us. Dave H. Contrarian. So some questions.
Oh, we have Dave Hunter with us.
Yeah, okay. Dave Hunter is going to be with us. So if one of you guys want to take over the screen, I have to go put my makeup on.
Yep. Any takers, right. Steve, Johnny, Kay, me?
You look really good with your makeup on, Dale. I have to tell you.
This is without makeup, yeah.
Yeah.
All right. Okay, I'll be back in a couple minutes.
Okay, mate.
Thank you.
So what do you want to talk about? Any ideas? Because we have limited time. That's why I'm saying we have. First of all, we tested parity today, right? We all know that. I've talked about it before. It was also confluencing with this descending channel in the EURUSD. Kman and Ryan, what do you think? Will parity be enough in the short term? Do we get a bounce from the parity level, or we just slice through it shortly?
I was showing this morning on the and already a couple of times on the flow show that to me 99 is the level where it plays ball or not. Because parity, there's always going to be a fight, and this 99 is a level that goes back to, if you take the rise from October 2000 up to
oh, you want to take it that much back? Okay.
Yeah. I think 99. Well, you have it right. You have it sort of there, but it's a different. It's coming derived from a different.
Yeah. These are extensions from the last
No,
actual
well,
bullish leg we had higher. The one that began at the end of COVID, at the end of the COVID sell-off, and peaked at the beginning of 2021. So these are the extensions of that.
Okay, I mean, mine is just like 78.6 of the 2008 move, which to me is important for two reasons. Well, first of all, it's that retracement level, and secondly, if you go a big figure down below a monster figure as parities, that means that parity will likely already be one. The fight is done, but fighting around parity could be more like just 10, 20 pips, right? It could be nearly a big figure. So in case 99 would hold, I think we might be in for a bigger, for a retracement, which I would call a retracement in current move right here and now, because the dollar is whatever anyone may say, still very strong. But if it would break 99, then we are going to go visit much lower levels, in my opinion. So for me, the 99 is where really this big decision time will be made.
Yeah, I agree. I think that sooner rather than later, we should have a little bit of a rebound. But I doubt that we're going to be seeing the low being just conveniently crafted at parity.
Yeah,
I think we're probably going sooner rather than later decently lower than that, right? That's what I think.
The thing is time though, if we would assume that what we are seeing in oil, what we are seeing in commodities, that we have some sort of a peak inflation, whether it be temporary or permanently, we haven't got a clue. We don't know. At least I don't know. But if we're seeing peak inflation and we're expecting, and there's a little bit of pressure on yields, we might see this 99 hold or parity hold for now and have this retracement in the euro dollar. But I do agree that for the time being, at least in my mind, it's going to be a retracement because there's so much weight hanging around euro's neck that I can hardly see euro stand up for more than one decent retracement also.
No, yeah, I agree with you. I agree with you. What do you think, guys, about I know it's a tough question. I said before why. What do you think about indices? Do we first get another leg higher and then lower, or we go lower from here? The more I see the recent price action, I have to tell you that the more I start believing that perhaps what we're going to be getting from this is something like this. I don't know. What do you think?
Yeah, I tend to agree. I think if we get like a couple of lower or one or two lower or misses or lower misses in that case on inflation expectations, we may see and if it goes paired with what people now think that there's cracks appearing in the data, even with lower rates, you're going to have an initial, because this is what the market is been doing for months and years now. We're going to see a jump in the indices possibly, but if it comes due to recession data or recessionist data, I can't see them hold up, to be honest. And that's where, to me at least, there's a possible big change on the horizon as to how we are going to trade stocks on the back of data.
Yeah. I agree with you on that as well. By the way, from what I see, we don't really have any data coming on at the top of the hour, like sorry, at the bottom of the hour, like we frequently do. So we shouldn't expect any market moving events happening now. We talked about crude oil. We've talked about the metals. What do you think about USD yen? Was this a little false break to new highs, or we're just taking a breather and pushing even higher?
It looks, again, there's something mentioned on the flow show. It looks similar to the moves when we got up to 136s in terms of price action. Now we came up, found a bit of a top, then busted the top by a little bit, then came back down and found the old resistance area resistance again. So I think it keeps coming in stages. It's not like we had, a month or so ago where it just was a moon shoot, up from the, through the 120s, that sort of thing. So it is taking a little bit longer to make these next steps, and it seems to need a catalyst now. So, for example, getting over the upper house election, and then Corona coming out and saying it's going to be business as usual. So it's waiting for these little catalysts. But, this CPI data tomorrow, it could be another swinger, but it could be important for dollar yen. If it's a really strong number, but we can't get above the highs we've just made, that's going to tell you the story, and then it potentially is going to start setting up a range again, which will give us the levels to trade potentially short from, but also tell us where the support areas are, and then we can trade the range and look for the breaks, just like
Speaking of which, because we have the interview starting now, one last thing before the interview. Assuming that the heads up they gave us about even stronger inflation and even higher surprise in inflation tomorrow, how do you expect the markets will react if indeed that's the case? Let's assume that the heads up we got from the White House that inflation is going to surprise to the upside does happen. What would you expect to see the markets do, Ryan and Kman?
Not a lot if it's higher, because they've tipped the nod.
Yeah, but since they said that, we haven't really seen the market doing much, right, to kind of price it in, right?
Yeah, because the market knows CPI is going to be strong. It's how strong. It's going to have to really shift some to beat expectations. A 2 pip either side isn't going to do much. If it's 5 pips either side or more, then we're going to get a reaction.
Kman?
Yeah,
agreed.
I think dollar may jump, but more against the low yielders than the more against the ultra low yielders than the other ones, perhaps. But I'm starting to have the feeling that the market will try to look through some of those CPI data now and turn their attention to real economic data. So I'm not inclined to follow a spike through on the dollar if it's only due to now inflation for tomorrow. That's my idea right now.
Okay.
Dale, have you got David on?
Yeah, that's what I want to ask.
I'm waiting. David's not here yet. It's my.
I just saw he just tweeted. Replied to one of the things. Email him the Zoom link.
I did. So I'm waiting for him. I emailed it to him. So we could wait for him to get here. He'll be here in a minute.
Absolutely.
We'll keep cracking on. So back to euro dollar. Where do you think, Steve? Where do you think it's going to be by the end of the week? Above 1001 or below 99, or in the middle?
I can't make such a prediction with CPI coming tomorrow first, and second of all, I've completely gone away from the game of predicting price action in very, very short term. You know what I mean? That's why all the positions I take are at the very least lasting several days, because I found myself being a lot more capable in swing trading and holding the positions even for weeks than trying to think of what's going to happen within the next few minutes, few hours, or even 1 or 2 days. It's a lot more easy, in my opinion, to manage such a time frame than the shorter term time frames, right? So I find myself much easier to make medium and long term predictions than to make very short term predictions. After tomorrow's CPI, obviously we're going to have a much better idea. But in general, as I said, as a general rule of thumb, I think that the EURUSD will have some rebound sooner rather than later. But I think that rebound is not going to be the beginning of an uptrend or whatever. It's going to be another corrective rebound, and then it's going to resume lower. And I expect it to decisively move below parity and stay below parity for a period of time at least.
Yeah. So basically, you're sitting on the fencing. We can't get a commitment.
Oh yeah.
Just for a laugh. Just for a laugh. Just for a laugh.
He'll let you know. Yeah. He'll let you know once everything is done.
Yeah. Let us know after. What do you reckon, Dale? Above 101 or below 99? End of the week.
101. I think tomorrow could be a turn day. You know why? It's very technical. I think there's a full moon.
If I have to make a prediction for the fun of it,
full moon,
right,
man,
I would say higher in the short term, because as I said, I think we're close to some kind of a bounce, but I wouldn't be putting my money on that. That's my point, right?
And I think you could top pick the yen even if it tries for a marginal new high, and we take out 135. You've got 132. You know, that little support line that held last week. It's a little flat line. I could show it, but I'm more concerned with trying to get David in here so I could grill him.
Yeah, concentrate on David in. Yeah. Now, I'm actually, Dale, I was talking in our chat room about this. If we get this last rush on the dollar yen, perhaps helped with next week Bank of Japan, and then combined with those inflation data, but I'm seeing cracks appear in the real economic data. I'm starting to see cracks appear, and I'm starting to see also the bond market starting to reject those yields above 3% in the 10s or whatever. So at least for a period of time, I was actually telling no later than half an hour before the phase started that I might give it a try to buy some downside options. To if we get the last new high printed, I'm thinking about somewhere in the 138s or so, and try to buy like a 135 put for a couple of months time, because we might see if the rest of the commodity market continues to soften, oil coming back, because all those factors were big contributors to dollar yen strength and to yen weakness. But if some of those factors start to fall away, there should be some logical retracement of some sort, possibly a good number of big figures, because the number of big figures on the way up has been very large. So there could be some really decent retracement on the horizon.
One thing is for sure, chasing USD yen higher from where we currently are makes 0 sense from a risk reward perspective as well, right? Where do you put your stop? I mean, what is your target, and where is your stop that actually makes any sense, right? I mean, you know, you shouldn't be fading trends without evidence, but on the other hand, that doesn't mean that you should be chasing after very fatigued moves in the hope that there's a little bit more left, right?
Well, maybe David's not going to make it because I got the link to him a few minutes late. So I don't see him. I've sent emails. So
yeah, I see. He sent us a tweet. Daily mail me the Zoom link 12 minutes ago.
Yeah, and I did it right around 9 minutes ago.
Okay, which is just fine.
Okay, I'll reschedule him.
Let's see, in case he hasn't logged in with that name, David, if you are on the webinar with a different name or something, just write to us on the chat so we can promote you. I see that someone has also sent him the link on Twitter. So he has that as well.
most of the guests already have the link or use the link, and I forgot with him I have to email it for some reason. So I forgot till I saw that interview.
So are you going to schedule him?
I'll try. See if he'll forgive me.
I don't think you did anything wrong, but okay.
Yeah. So anyway, it was great seeing you guys today.
Great seeing you as well, Dale.
I mean, living in this virtual world, at least, it's like we're virtually together.
And don't forget, people, we have we have the morning edge in 35 minutes from now.
Okay, and that's the tip of the iceberg. And get into the trading room. I bet the trading room is really not missing a beat, even though Blake's leadership is real important. That
Blake is going to be with us, by the way, by the end of the day.
Okay. So was he in San Diego and ignored me again?
I think
he was
in California
to San Diego.
Childhood friend of his with one of his sons, if I'm not mistaken.
Has a boat or something.
His friend has a boat, I think, yeah.
Yeah. So, okay. Everyone have a good day. Tomorrow's the day. So, don't pile into positions in front of a binary event. That's all I could say.
That is true.
Amen.
Okay. See you all in...
David's here.
Oh, David's here.
David's here. Gosh, anyway, I'll get him.
Okay.
Help me promote him.
Yeah, I'll do it right now. Right. Promote the panelist. And Dale, you can take the extra time. Until the morning edge. That's no problem whatsoever. Let me ask him to unmute as well. Okay.
Have a great interview, Dale.
Thank you, Kman.
Enjoy the interview.
Nice call on the end yesterday. Great area.
Perfect. Enjoy.
David, how are you?
I'm good, Dale. Sorry about the
I'm sorry. Anyway, I forgot to email it to you. I got caught up in our discussions here. You want to use the camera today?
Yeah, let me see if I can get it. Hold on.
Okay. And then I'll share my screen and we'll go over what's happening in these markets.
Let's see. What is it?
Yeah, it's just a little video thing. And
yeah, I'm trying
you use your iPhone for all of these interviews, don't you?
Yeah, I do.
Yeah.
For some reason I can't get the camera.
Okay. Well, that's fine. Okay. So we'll just talk about what's going on here in the markets, David. That's the main thing.
Sure.
Okay, so let's talk about the S&Ps. Last time I talked to you was at the Trader Summit in early April. And, I've been in these markets a long time. And, there are many occasions where I might be right long-term, but short-term early. And I think your expectations were, 42, 4,300 would hold. So my question to you is twofold. Do you think these are the lows, or will one more pop in yields if there's a negative number? We'll get to that. And because the market took longer and corrected deeper, are you adjusting your final upside target, or is it the same?
Yeah, so first of all, yeah, I don't think my target needs to be adjusted down and certainly not up. I still am using 6,000 on the S&P as my target. And for the NASDAQ, I'm still looking for 20,000, Dow 45,000. So those are big numbers. Yeah, you're right. I was thinking we'd probably see the correction take us down to 4,200 at the lows. When we broke that back in February, I guess, it was pretty clear we were going below that. Yeah, I can see possible risk down to 3,500. I don't really think
still.
you'll see.
Yeah.
Yeah, I don't think you'll see 3,500. I actually think the lows are probably in, but I wouldn't rule that out. Obviously, it feels to me like we are very close. Everybody's expecting a higher CPI number tomorrow.
Right. The White House planted
even the
that
White
out
House.
there. Yeah.
Yeah, they're trying to basically prepare everybody. So who knows? I mean, I don't, I always say I don't really pay much attention to monthly releases. They're backward looking releases, but it certainly helps going into the number to have expectations so low, meaning looking for higher inflation. Either way, whether CPI surprises on the downside or the upside, I think inflation has peaked. Obviously, CPI is not the number the Fed really pays attention to, and it's really not the true measure of inflation out there. So you're seeing plenty of leading indicators in the form of futures telling you that not only is it rolling over, but it's rolling over hard. I mean, oil.
Yeah, I saw a tweet of yours when we were up here, and you said that this could have been the day. And I think it was the day that wasn't it the day, and it happened on a news event that Europe was gonna ban Russian oil.
Right.
And that was it. And we tagged this major support level and tried to bounce last week, but even the oil bulls, like my associate Steve Volge, think that we're going 80-ish. Yeah, but the formation.
Yeah, exactly. Yeah, that's where I think the next stop is. What was pretty clear to me, people didn't pay much attention to the fact that we made our high on the day that Russia invaded Ukraine.
Right,
so we went
right
to
here.
130 on a spike, and then we spent 3 months filling in below that 130, and all I heard was talk of it was what I call leapfrog. Lots of people saying 150 and others saying 200, and some saying no, it'll even go higher than that. So it's pretty clear you had the emotions in there for higher prices, and yet it was looking to me like what we were getting was a lower high retest and then a rollover, and that's exactly what we've had. And the other thing that was pretty clear, and I called it, was I looked at XLE on a long-term chart, and it was putting in a right shoulder on a very long-term chart, and it counts to, it was got up, the right shoulder was in the low 90s. It got up to 93 or 4, I think, and rolled over hard. It looks to me, as I keep saying, in the bust, you're going to see oil down to 30. I think in the bust, you're going to see XLE down to 20. So again, look at where, every single institutional money manager that would come on CNBC or Bloomberg would say my favorite group is oil stocks. They're still undervalued. They're still very cheap. So it's
the rotation. So the rotation for this next rally, I'm sure they're going to come back into energy and think it's people will buy dips all the way down. Right. But I believe that your preferred longs would be Russell, because you think we're entering. That's going to be a real speculative phase of the market if it turns into a melt up. So are you still in that camp that Russell will outperform the rest of the market?
Given my targets, I think Russell has the most upside, but it's pretty much, I'd say it's also the NASDAQ, and it's pretty much across the board. People want to know, what sectors are going to outperform. And I said, I can tell you what's going to underperform. I think it'll be the defensive sectors, and, meaning staples, utilities, and then obviously energy. But I also think, yes, semis I think will do well, even though they've been hit really hard in this correction. I think miners will do well, even though they've been hit really hard. I think industrials will do fine. I think some of the early cyclicals like autos and housing will come back when the Fed pivots here. So it's really it's a broad rally. You almost don't have to pick sectors because of the moves you're going to have in the S&P, the Nasdaq, the Dow, and certainly the Russell are going to be big. So
okay, so I look at the Russell here and I see a 2 drive, and that implies there could be one more shot down for a 3. I'd be interested on one more drive in the RSI holding above 30 here. I also wanted to talk about, you have a lot of confidence in Powell. I've heard it in the interviews, and that you've said Powell knows what he's doing, and
well, I think you're a little behind on my commentary, because
okay, all right. So the question then is, all right, was Powell more hawkish than you thought he was going to be 6 months ago? And that's part of the reason. So bring us up to date on Powell, your view of Powell now, 6 months later.
I'd say since probably late April or May, I started saying Powell. I was very critical of Powell back in 2018, saying he was way over his head. He was learning on the job. He was when he made that commentary about rate hikes are on autopilot, it showed his inexperience. I was very critical then. In 2020, in response to the pandemic, he acted tremendously swiftly in unprecedented type of period, and did the right things to make sure we didn't just collapse. So I gave him a lot of credit and said he's learned a lot on the job. I think he's really stepped into his role. I then, back in late April, I think it was, after Bill Dudley's speech, and then I guess it was probably the May meeting when Powell kind of acknowledged that he was right on board with Dudley on this. We're targeting the stock market; it needs to go lower to tighten financial conditions. That showed me he knew, he was really behind the 8 ball, didn't know what he was doing, and I became from then on. I've been saying lately that Powell is probably making, is probably going to make the biggest policy error in history.
If he continues to tighten, David,
and
if
he continues
to
tighten, and my guess is what we're going to see. I do think we're going to see some sort of a pivot this summer. I don't know whether it's just a pause in rates. Certainly, initially it'll be a pause in rates, but I think he's not only causing a crack up here, he's causing a worldwide crack up. When you see Sri Lanka, when you see all the stresses and strains around the world.
What about these bank runs in China?
Wait. That comes from a Federal Reserve that doesn't understand it is causing a liquidity crisis everywhere. And it's so myopically focused on an inflation number that is, he was right initially. Some of it is transitory, not all of it, but some of it. And it is not, what he does not understand is the leads and lags. And this is typical of a Federal Reserve chairman.
6 months to a year, right?
Yep. So they're waiting for the reality of their policy to work. They want to see data release that comes out and says, okay, inflation's back down a lot. That's way late. You need to look at futures things. You need to look at things that are leading indicators, and he's looking backwards. So I am very critical of him right now. Now he can get back on board, but my guess is, and this is just a guess, that what I think we'll see is a pause this summer, and the market will get excited about that. Maybe more than a pause when they start realizing just how much the economy is decelerating and we're getting, financial problems. And it's not the market. Everybody thinks he targets the market, that he used to target the market. Is really the Fed's job is to target the economy and obviously take care of inflation. But he's ignoring the economy and ignoring all the signs that things are heading south in a hurry. And frankly, what I think shows me his inexperience more than anything, and it's not just him, a lot of the street is like this, the failure to understand that we are in unprecedented times in terms of leverage in the global system. Yeah. And so an error made today that might not have caused the disaster it's going to cause today is going to cause a huge, crack up, because leverage just exacerbates everything. He seems unaware of the risks, is what I'm saying. So,
okay, well, that would lead me to conclude that you probably have more conviction about the bust because of his overreaction and current actions based on lagging information from CPI, that he's ensuring the bust comes later. The question is, you know, how do we get a melt up? Oh, you know, just one thing, Dave, I wanted your comment on it. Now, he says he's another Volcker. Okay. Now, Volcker did it twice. Remember, you know, when we were 5 years old and we had our ice cream cones and Volcker tightened, then he stopped, and then he did it again big time. Could that be the scenario that we have Paul play out here?
I think precisely. That's what I expect here. That's why I say I think we'll get some sort of a pivot this summer that will ignite the melt up. And then because of Bill Dudley's speech, it's going to be still front and center on Powell's mind. If we see you know, the S&P at 5,500 or 6,000, he's going to be saying, oh, I was wrong. I shouldn't have taken my foot off the brake. And he's going to come back probably with more aggressive QT is my guess, along with, you know, maybe some hikes. But my read of the bond market, by the way, Dale, tells me that we've seen the highs in rates. I think we're going to see 2% or below by the end of the year on the 10-year. So that gets, you know, that makes it hard for me to see that he's going to do a lot of rate hikes after this summer. I just don't think he's catching up now. So sure, we're going to get 75 in July, no question. And he could do another one after that. But I just don't, you know, you're not going to see such a divergence between the 10-year and the overnight money that he's raising while 10 years telling him he should be cutting. So,
technically that lines up. Technically, that lines up with your target. So, you know, this is like 50 bips. So 50 bips under here is about, you know, no, that's 70 bips. So it takes you down to 2%. Here's your 50-week moving average. And all we have to do is take out last week's low to activate that formation.
Yep. So
and the market's going to like that.
Yeah. And you know, the only question I have on the 10 years, there's a gap up at 320. So could you get a spike on the CPI if you could?
It'd be a right shoulder.
Yep. And I don't think there's much room beyond 320. So I think basically from here, it's very little upside on rates and a lot of downside. And of course, I keep saying that in the bust, and it won't be a straight line. They'll you know, once we get to say 182%, you could have a little bit of a backup in rates before you go down again. But I do think that in the bust, you're going to see 0% 10-year and probably a negative 10-year. The 30-year, I think, can probably get down to a quarter or maybe a half. But so
let's talk about King Dollar then, which is something else that has surprised many, except the milkshake theory guys. You know, been looking for this, and you know, here we are. I think the market needs a lower dollar because they're finally talking about earning translations of the strong dollar. David, do you think we're close now? Can a broken clock be right twice a day? We're near a high here, don't you think?
I'm probably the last guy with any credibility on the dollar because I was looking for it down all the way up. But yeah, I think we're very close. This is typical of a blow off, right? I mean, you got people talking 130 and higher, 120 and higher, and I think we're there. I don't know what day it's going to roll, but basically, and I'll get back to the dollar, but if you look across many markets, whether it be, you know, the stock market, the bond market, the currencies, the metals, everything really lines up with a Fed pivot. When the Fed pivots, you're going to see all reversals. You know, there's some big reversals in many, many markets. So the dollar's no different. I continue to say we're going to see something between 80 and 85 on the dollar. And that sounds crazy, but I think we're in a crazy time.
Yeah, you like the Aussie, David, and it's not a bad looking chart. It's held up much better than euro.
Yeah,
because when you see, yeah, go ahead.
I think you're going to see 90 versus a dollar, 0.90 on the Aussie. So, and same with the Canadian, not as much. Canadian dollar looks maybe 95 from here, but that's, basically, I think it's again the sign that once the dollar rolls and rolls hard, you're going to see the commodity currencies come back into play.
In April, we were on different sides of the copper trade.
Yeah, well, copper's another one. Again, all of this,
they all go up together and down together. It's all one market, Dave, isn't it?
But it's also all tied in to, again, Powell's missing the signals. All of these are signals that he's gone too far. When you have copper fall as sharply as it has fallen, when you have oil falling like it is in the face of everything going on, when you have wheat falling sharply,
wheat too,
very sharply. When you have
how is that economically sensitive? It's not. It's just financialized.
Yeah, exactly. But it's also because of Ukraine. It has a global.
But it's the same chart as everything.
And we've seen, you and I, having been around a long time, when deflation hits, or inflation hits, it hits all commodities. It doesn't.
But there's at least some differentiation between equities and commodities, and maybe the dollar and sectors. But it seems like the whole board, Dave, is like a balloon that when there's easier money, air is going in, and they're all going up, maybe different magnitudes. And when there's tightening, the balloon, the oxygen is sucked out, and they all go down, just with different magnitudes and hardly any differentiation between asset classes. Have you ever seen that before?
Not to the extent we are now, but I think it really points to the fact that the Fed's policy is far more aggressive and wrong than any we've seen in a long time. I mean, I get it. I get why, it's easy to make the mistake, because you look at inflation and then you look at interest rates and you say, we have a long ways to go. Or you look at markets up on stilts and you say, well, they can go down a lot more. So I can understand a Fed perspective like that, but that's why it takes somebody who really understands monetary policy and understands markets. And Powell does not. He does not understand that we're in a very different cycle because of leverage and because of everything that's going on in the last several years, particularly.
Maybe Kramer has to yell at him. They just don't understand.
Yeah, right.
I'm gonna rant out of Kramer. Think that would do it?
I don't think so, but Powell, you mentioned before the Volcker comparison. Powell, made a comment in one of the last couple meetings, referring in a way to himself like a Volcker, kind of saying, I'd like to emulate Volcker. That scared the hell out of me. Yeah. Volcker was a very smart monetary person. He was a very long time central banker.
You know what his nickname was, Dave?
Powell's an attorney. They're very different people.
You know what Volcker's nickname was?
I can't remember.
The liquidator.
No, I mean, but what he did was correct back then. If Powell thinks he can do what he did then, again, if Volcker had the leverage we have today, and did what he did, we wouldn't be around to be talking about this.
Yeah, but it'd be Mad Maxville.
So. Yeah, I mean, that's the thing. Powell just doesn't have the full knowledge and perspective, and he should not be doing what he's doing. Now, I will take Bill Dudley to task. That speech he gave in April was the stupidest speech he could have given. I mean, the Federal Reserve should never be targeting the stock market. Stock market, you shouldn't be targeting nor should be propping it up. But the stock market should be left of its own free will. It will discount things if you leave it alone, and it will go where it needs to go. To say we're going to get the stock market down because we know best. Remember Greenspan's rational exuberance? That was many years too early.
Yeah, I do. And also, someone made a point that just 2 percentage points in employment, say, went up to 5% from 3.
Yep.
Can you imagine all the support payments for people that are going to be unemployed? That there'll have to be some type of aid and rescue, and we're broke already. So
yeah, I think you're going to see a lot more than 5% on unemployment because of what the bust is going to be. People don't realize that stuff can come fast and furious. People want to be able to project everything out. It doesn't work like that. So once we get into the bust, I think you're going to see a lot of layoffs. But I think again, labor is being distorted a lot by what's happened in the last 2.5 years in the pandemic. And look at savings, which was up at 35%, has dropped down to below the norm, down to 4.4%.
They're using credit cards now.
Yeah, and they're using credit cards. To have such a dramatic drop in savings, people are, when you go out to restaurants or you go to the dry cleaner or whatever, you see everywhere signs of help wanted, and you talk to the small business people and they say we can't get help. Or you go into Target and the inventory is laying around in the aisles because they don't have enough people. It's nobody's talking about it, but where are all the kids? Where are all the early?
Where are the Great Resignation? How are they paying their rent?
Yeah, so they paid because the government gave them all kinds of money, and they said, "Oh, this is great. I don't have to work."
But that was gone a long time ago.
It's catching up now. Savings has really dropped, and so then they're stupid enough then to say, "Well, I don't want to work yet. I'm going to borrow on my credit card." that all is coming to a crashing end sometime soon, because they should be out earning a living and they're not. And I don't hear anybody talking about that. Everybody acts like we have a tight job market. We have a tight job market because people are choosing not to work. We've really changed the focus psyche in this country, the psyche in this country.
We were known for the work ethic.
Yeah, and it's not for the better, that's for sure. No. So there's a lot. I mean, there's a lot to be bearish about, and I am. What people don't realize is that we've put so many people on one side of the boat, bearish, that if you get a pivot, you're going to be amazed. That's the only reason I can call for this melt up. It's an extreme call.
They say the public is still long. They haven't haven't capitulated. Do you believe that?
I don't totally believe that based on what I see on Twitter. But
there are a lot of people that are depressed.
Yeah, I'm not sure. Certainly the AAII numbers, the small investor numbers are pretty bearish. I mean, they're at historic levels generally. They bounce up and down week to week. But so I think bearishness is very high. I want to get back to what I said on the S&P because I don't want to leave the wrong impression. I'm not saying we're going to 3,500. I'm saying that's a possibility. I think there's a better possibility that we've seen the lows and that, we're just kind of filling in still, waiting on CPI, waiting on the Fed. But I don't, there's a lot of reasons why when you look below the surface, this thing may not have a lot of downside, but I won't rule out 3,500. And no, that doesn't make me change my melt up. Everybody says, "Oh, if it goes, what level will it go to that you turn more bearish?" I'm pretty much convinced that sentiment is just so bearish right now that whether it's from here or from a little lower, there's a big leg up.
Google looks good. Google looks good over 24. It's going to give you 27 and then maybe new highs. Microsoft Microsoft looks okay. I don't think we're going to make a new low in Microsoft. So there, some of the mega caps look okay.
I think
they may pull back, but yeah.
What you've had is a huge correction in the over-owned big growth stocks, Amazon too, that I think they've all pretty much bottomed and are beginning to be reaccumulated. And I do think those three in particular go to new highs and significant new highs. I don't know that Netflix is going to new highs. No. I don't know about Facebook.
I like that Google chart.
But Google, Google, Amazon, Microsoft, they look like they just had very stiff corrections because they were so so over-owned in portfolios.
Yeah.
And that's the thing I do want to say too, is people don't understand, I'm a macro strategist. What nobody ever talks about is what's discounted today. So people discount, and then they want to discount it again when you get another bad number. Then they want to discount it again when you get another bad number. At some point, you've discounted the scenario for the bears. At some point, having Amazon and Google and Facebook and Tesla, et cetera, come down so hard. We have discounted a lot. You hear a lot of talk about the upcoming earnings season, what we're in now, and how the earnings,
there'll be revisions, downward
there's going to be big downward revisions, so we have to wait to get through that. Well, we've had big downward revisions in stock prices, so people do not understand. Stocks are looking out, a couple quarters. Yes, they can, if they get a number that they're surprised by, they can readjust again downward, but generally, we've had a huge reaction to this, Fed tightening cycle, to this earnings rolling over cycle. So I just think it's easy to, all you need is a Fed pivot, and you're going to have people looking over the trough and saying, hey, look what we can get in 2023 if the Fed's back at our, is at our back again instead of a headwind.
How long should this narrative play out and you get like a pause? Not right to an ease, but to a pause. Do you think the market will accomplish most of this to the upside in 6 months?
I think that's the possibility. I get locked into because people want me to, give them a time frame and stuff. What I will say is two things. One, I'm still saying 3 to 6 months from when the melt up starts. So let's say it starts this week. It could be over by the end of the year, but it's not so important whether it's 3 months, 6 months, or even 9 months. It's going to be a much steeper leg up than the last leg up, which was the March 2020 to the end of 21. So that was basically, when you do the count on that one was basically, 21 months. So this one could go 12 months, or it could go, but I think more likely, I think you're going to get the parabolic, so it really shortens it. That's why I can say it's unlikely to be 3 months. It could happen, but certainly 6 months is possible. But I'm not, it doesn't matter whether it's exactly that or whether it goes a couple months beyond that. The point is, it's going to be
the direction right.
Well, not just a direction, but I think the magnitude is going to be perhaps the biggest rally in history. And so, and that can still be the case, and the biggest and steepest rally, and that can still be the case whether it's 3 months, 6 months, or 9 months. And I'm not stretching my timeline. I don't have a timeline really. I still think it very well could be mostly, if not all, done by the end of the year. But I just want people to understand it's the steepness of this rally that makes it, I think, what I like to call stunning. I think it's going to be a very stunning period of time.
Okay.
And as you know, the way sentiment works right now, the majority of people are looking down when I think we're on the verge of something that we've never seen before in terms of magnitude of the rally. So that that fits with what we've seen before. People are most bearish at the wrong time.
Okay, looking forward to seeing this comet streak across my screen, David. Really appreciate your level of conviction and your openness